Hello, good day. Welcome to Dstockmarket's channel, where we have another brand week, and I'm your host, Stephen Look. Let's take a look at what is happening in the major indexes. So, last Friday, we have a really nasty bearish bar here. It's almost trade through so many bars here, and this is usually very bearish for the short term. Today we see that it's bouncing up higher, but there is a resistance around this level. You can see the lows around here, so it's very possible that even if there's a bounce, that it might not be able to go up above this area, 4645 area. But if it is able to trade back above the 4645 area and go up, that means all the sell-off will have been recovered, and this will be probably a shock to the bears. And most likely, from there we'll see how it goes. Most likely it'll be just a shock to the bears, and the market might go up. But you can see the signs of weaknesses. The S&P make a higher high, but there are divergences even in the MACD itself, and there's a sell signal here. Sometimes they are ignored, sometimes they are not, but in this case, the sell signal is still very much in a kind of railroad track down. You look at the sell signal here, right? It was very bearish for the S&P until there's another bullish cross here, and it produced such a nice run. There's a railroad track here and a nice run up for the S&P. So we are still in a very how do you say, not a very conducive environment for the bulls, because this might be a bit bearish for the market at the moment. Well, we'll see how the bounce up goes. If it's able to go above here, then most likely it'll be shock to the bears, and we'll probably resume sideways trading and go up. But what I want you to look at is how high can this green bar today go. If it trades around here, it goes up and then goes back down, makes some kind of a topping tail pattern where the body is small. Right? What happens next is if it trades below the low of this green candle, there may be another wave of sell down. This is a bearish continual pattern if the body of the S&P is very small. So do take that into consideration. But there's some support here, and also a nice support around here is where the 50-day moving average is. So we do not know what the market might do at this moment right now, but if the market drops to the 50 MA and around this price support area, then we'll see if there's any bullish reversal candle back up. So far, there's no bullish signs yet, so do be cautious. Now let's take a look at the Dow Jones. The Dow Jones gap up today from the lows of this big red bar, and trading. There's support here. Right, there's quite a lot of support around here. Quite a lot of support around here. So it might be difficult for the Dow to go any lower. Unless it just slashes through this area, right? The MACD sell signal was around here, and it has a bearish railroad track, still bearish, but as time goes by, you might want to see if bearish momentum is slowing down. The histogram will go back up a bit, so you'll know if the bearish momentum is slowing down. So we are at a significant area of support here. So if the support here holds and you see bullish reversal candlesticks appear, then you know there's a short-term bottom, and probably Dow might soon find its way going back up. We can draw a downtrend line here, right, which is where it's possible for the Dow to trade. If the support hold, Dow might trade sideways a bit, and if it breaks out above this downtrend line, then we will have a nice resumption of the uptrend, which November and December usually are very good months for the stock market. And if this happens, if support holds and it trades back over this downtrend line, then we'll see higher prices. Let's take a look at the Nasdaq. So I'll be covering the three major indexes first. Nasdaq, you can see higher highs, divergence. There's really a sell signal here. The last time there's a sell signal around here caused a lot of damage, so you might want to pay attention to it. But at the moment, the Nasdaq is healthier than the S&P and Dow. It hasn't dropped below this low yet. So if this is a support area here, if the support holds, then we might trade sideways, and we want to look for slowing down of bearish momentum here. If the support here does not hold, next level 50 MA. Right, we're going to see how much today's price action is. If this green bar goes back way up here, then we'll see it'll be a very bad shock for the bears, and most likely it will turn bullish, or at least sideways trading for the Nasdaq. I want to show you the semiconductors as well. Semiconductors has gone up a lot, and I think it's a stronger performer among the different sectors. One of the strong performers. What I like about it right now is it's still trading above the 20 MA. Usually, if the index or sector is above the 20 MA, it's good. But if it drops below, then it's not a very good short-term sign. But so far, it's staying above here. What I don't like is the appearance of this sell signal in the MACD. Usually, when it appears, it can cause a bit of damage. You see, there's a sell signal here. The sector went down a bit. There's a sell signal here. The sector went down a bit until there's a bullish cross here. But it's still trading above the 20 MA. So as long as it's above the 20 MA, I am not too worried about this sell signal. But once it trades below it and then drops below this area, then we could see it going back down to the 50 MA. The 60-minute chart, what we can do is we can draw a trend line here. Draw a trend line here, and we want to see if the support holds, and if it's able to trade back above this downtrend line, then it's going to be bullish again. Right now it's below the 20 MA, not a very good time to buy semi stocks. If you compare the times when the SMH is trading above the 60-minute 20 MA, it's a good time to buy. Even here, right up for a few days. But after when it goes below 20 MA, you want to pay attention. Let's take a look at the XLK. This is a tech sector. Above the 60-minute 20 MA was doing very well. Then it went down and then trade back up to 20 MA. Gave us a very nice run up. Now it's below the 20 MA. It's a bearish cross here, which tells us not very good time to long tech stocks either, not at this moment. What we want to see is I prefer that you long tech stocks when they are above the XLK 20 MA. And if we can find support here, trade sideways, go back above the 20 MA and break back above the downtrend line, then you might see it going back up. Here the MACD, right? Lower low, maybe a divergence. I don't know. Maybe we trade sideways, and if this MACD histogram divergence, might warn us of a bullish divergence to trade back up. So we're looking at the daily of the XLK. What I like, seem like the SMH, the semis, still right around the 20 MA, which is a good sign. But what I don't like is this sell signal here in the MACD. Last time we had a sell signal MACD damage until there's a bullish cross here. So you want to pay attention. If XLK does not hold, the 20 MA does not hold, and it drops below this support area, then you might see it going back down to the 50 MA. So here's we are looking at the market to form a bias, and right now it's still not a very bullish bias, bearish bias in the short term. So my advice is not to long stocks. 75% of stocks won't do very well for the short term if the major indexes are not performing very well. The other 25% maybe is in some different kind of sector or industry that is defying the markets. It happens, but let's say around 7 out of 10 stocks won't do very well, right, when the markets are not well. We are not looking for perfection, but we are looking for a bias, because our entries are mostly based on setups, chart patterns. For me, I like to look at the ascending triangles, the triangles. So if it's a bullish bias in the market and there's a triangles forming, yeah, this might be a good trade. But if it's a bearish market bias and a triangle appear, most probably they won't work so well. And you also know this even without analyzing the major indexes itself. If you go through your candidates, right, you scan for stocks, whether manually or using a software, and you see there's not many candidates appearing. Like during this bull run up here, right, probably I don't know, for example, there may be 10 or 15 candidates every week that appear during this period, and you see during this period there's less than 5, maybe 3 that you really like. So it kind of tell you that the market environment is not very good for your trading strategy as well. So I hope this simple analysis benefit you. Do press the like button. Give me a thumbs up if you find this informative, or if you've learned something, and do subscribe for more future videos, because I'm going to post more videos. Last time I used to write on my website a lot, but now I want to focus on making more videos as well. So do subscribe to my channel for more videos like this.